morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here for the remainder of the open session. Hold on one second here while I get my charts for you. For those of you new to the DTS trading room, welcome. I'm going to give you a real quick overview of what you're looking at here. All right. Hold on, just want to make sure you got the screen share. Okay. This is the DTS system. It's referred to the DTS system, Diversified Trading System, because we're looking at the market from 3 different points of view. You know, have you ever had those days where your trades are working right one day and they're not working right the next day? Well, you know, what has changed? Well, obviously your signal hasn't changed. What's changed is the underlying market condition. So here on the top left, we have the Hawk Scalper. In the top right, we have the Falcon Swing Trader. Bottom left, we have the Eagle Trend Trader. And the bottom right is the latest addition to the DTS family. This one is called the Raptor. The Raptor actually incorporates elements of the other 3 trading birds all into one. So there's elements of the Hawk, the Falcon, and the Eagle all in this one trading tool. Signal generation. It develops the same regardless of what tool you're using. First, you're going to get a warning dot along with an audio alert. That's going to let you know that a trade is setting up. And then when the trade parameters are met, you're going to get a triangle and a hash mark. And that tells you that you've got a trade that's ready to take. Now, you're going to see that we're not taking every single trade. Rather, we're going to focus on some high probability signals. And we're going to focus on taking those. And they're really not that difficult to spot. This signal right here is one of those high probability signals that I'm talking about. This is called our first micro-macro cross signal. And it occurs here on the Hawk Scalper when the micro line, that's the thin one, crosses the macro line and everything comes into sync. So we have green bars, green signal, green trend lines, and a green filter. That tells us that we have a high probability signal. Simple, right? Here on the Falcon Swing Trader, you can see again signal generation is done the same way. You get a warning dot along with an audio alert. You get a triangle and a hash mark when the signal is complete. With the Falcon, we're looking for the trend line, or to stay in sync with the trend line. So when the trend line's green, we're looking primarily for buy signals. When the trend line's red, we're looking primarily for red signals, or sell signals, sorry. This is a nice signal here. This is called our trend change signal, and it also happens to be what we refer to as a late filter entry signal. And don't worry, I'm just going over these quickly for you. We'll be pointing out more of them as the morning progresses. We're getting a warning dot, triangle, hash mark. The bars are in sync. The trend line is in sync. The filter is in sync. So that is a sell signal for us. So right now we got a little bit of a mess going on. And honestly, I don't expect the markets to move very far today. Of course, tomorrow is the big vote in Europe regarding Britain's possible exit from the European Union. So the stock market's all kind of waffling back and forth along with the currencies, not really sure which way the market is going to go from there. And you can see this is the Eagle Trend Trader, and we certainly did not have a trend the last few days. The Eagle Trend Trader uses this band here to determine our direction. No, it's not an Ichimoku cloud. I know it looks like one, but it's not. And here too, we would primarily be looking for confluence. Namely, to buy, we would be looking for a bullish band. We'd be looking for green dots, green triangles, and hash marks, green filter. Oh, we're working on one. It's going to be against our ATR. I'm not so sure I'm actually interested in taking that. We'll give them a few moments here and just see how things are going to shape up. Even if we don't get a high probability signal, I will take a signal today just to show you how the system works. Down here now, this is the Raptor. And yes, you can change the Raptor bar colors. That's usually the first question I get. You can change the bar colors here. As I mentioned, the Raptor incorporates elements of the other three birds all into one. So you can see we've got the trading bands here borrowed from the Eagle. The whole Eagle trend trader is actually programmed here into this filter at the bottom. We've got bars and signal generation borrowed from the Hawk and the Falcon. Few add-on tools. Now, so these add-on tools are universal. They will work regardless of the trading system you're using. So even if you're not using DTS, if you're using like a 15-minute chart or a tick chart or something, these add-on tools are going to work. I'm just taking a look here at this sell signal that we're looking at. Yeah, give me a little bit of a bounce. Give me another test of the high and a failure, and I might take a look at selling you. We're getting what's called a soft edge sell signal here in the Raptor. It's not the strongest looking signal. We could take it on what we call a second push entry, namely the signal has already engaged, and we can look at the renewed momentum to bring us in on the short side. I'm watching the Geiger counter here. I may throw a signal on there just to show you how these things work. Let's see if we can't get in there with a little bit. So what I've done is I've thrown an order in below the current low of this bar. The reason being the market has engaged the signal, but the buyers stepped in, all of a sudden started to buy the market up. I'm going to get my stop strategies in play. So if this momentum picks up again to the downside and brings us in, we'll have a short trade. Maybe bring us down to, maybe back down here to 4,400, maybe a little bit deeper. I was going over these add-ons. As I mentioned, these will work on any trading system regardless whether it's DTS or not. The Geiger counter here shows us the order flow. It shows us essentially the time in sales. We have the histogram portion of it here. So we can see there was some fairly equal buying and selling. Sometimes we're going to see a little bit of a spike or an island, one side or the other. That shows us some very aggressive buying or selling. This dial around here is very interesting, especially when you're looking to get into a trade. This is what I want to see. I want to see this dial pull hard to one side and stay there, especially on the short side. That's going to show me that there's a lot of sellers buying through or chewing through those orders. There we go. Oh, didn't hold very long. Ideally, I want to see it hold for like 3 or 4 or 5 seconds. There we go. Come on, let's hold. That's not bad. All right, it looks like we're going to get engaged here in a second. We've also got this needle on the Geiger counter, which gives us a idea whether the market is more bullish or bearish or neutral. Right now, you can see it's actually green. I suspect, or I'm hoping, no, they're too even. Normally, we'll see the Geiger counter pull over here and hold and hold. Oh, see how it's doing it to the buy side? When you see that kind of thing happen, when it pulls and holds to one side of the market, then see how it's doing that to the buy side all the time? We should see some buying rallying out of here. And if we don't, well then that tells us that the sellers are absorbing all that buying pressure and we should see a pretty good move lower. So now we're actually seeing the bar rally a little bit. You can see the Geiger counter keeps pulling over. Javier, is asking, I don't see a dot for that short signal. What happened is it probably got absorbed. Sometimes it will do that. It will print a warning dot on the same bar, and then when the signal parameters are met, that warning dot becomes absorbed and it becomes actually a triangle. You see on this one here, we got the buy signal. We had the warning dot first, and then the triangle and the hash mark. So that can happen. It doesn't negate the signal in any way, however. But you can see from the Geiger counter, now we got that little bit of an uptick. I'm going to close this order out just for a second. I forgot to mention the other add-on here with the Falcon. We have the Ultimate Support and Resistance Suite. This is an assortment of 21 support and resistance lines. No, they are not pivot points, and no, they are not Fibonacci levels. Every once in a while they'll coincide with one, but they're not that. They're actually better. And I'm not just saying that. You'll see they're actually much more sensitive. So we have the gold line here. This is the median line. This tells us that we're right in the middle of our assortment. Above we have primary resistance, and below we have primary support. These three lines tend to set the tone of the day. If the market gets above the primary resistance, it tends to be more bullish. If it gets below, it tends to be more bearish. Let's just scroll back through yesterday's trading, and you can see we had a nice little breakdown here through the primary resistance. The market moved up, bounced off of it, produced our sell signal, and fell down here to the primary support, where it also reversed and started heading a little bit higher. A couple of reactions here to the median line. Nice little support here off of this trend line touch signal, where the market retreats to the trend line, touches it, comes out with a buy signal, and a nice little rally now to the primary resistance. That is also a system add-on, which means it will work on any chart, not just a DTS chart. Josh is asking, and if I haven't mentioned already, please, your questions are very welcome. It's going to make the day go by a little bit faster because I suspect we're going to see a rather sideways day. Josh is asking, with all the dots, triangles, and lines really confusing. I know when you first look at it, it might seem a little overwhelming. It's really not that difficult, and let me show you why. Where did I put it? There it is. So here, for instance, is what we call the cheat sheet for the Hawk Micro-Scalper. These are the 5 high probability signals that we tend to focus on. So the first one I already pointed out to you is the first micro-macro cross. So we're just waiting for the micro line to cross the macro. Everything comes into sync. We generate a signal. Another very high probability signal is what we call the macro pullback. Again, it's pretty easy to identify because everything stays in sync except the micro line. The micro line changes color. Sometimes when the market starts drifting sideways, we're going to be on the alert for a 4-arrow consolidation. And all that means is we're going to print 4 arrows, 4 buy signals, in this case buy signals. And we're going to anticipate that the market's going to move off of that 4th signal. Then there's the post-consolidation pattern. In this case, it was also a macro pullback signal. Again, that trend line just changed color. And then last, we have the red bar buy, or in a downtrend, we would have the green bar sell, where we get a red bar printing a buy signal. These tend to develop near the end of a trend. And you can either take them with the trend, or you can look to short them should the signal fail. Here on the Falcon swing trader, these are your cheat sheet signals for the Falcon. We've got our basic trend change signal. This one drifted a little bit further, but I had all three signals on one screen, so I used it anyways. But it's essentially the first signal where everything is in sync. So the trend line changes color. It's the first signal where we have red bars, a red trend line, red signal, and a red filter. After that, we're on the alert for perhaps a late filter entry signal where the trend line does not change color, but the filter goes out of sync and comes back into sync. And then we have our basic trend line touch signal where the market retreats into the trend line and comes out of there with a buy signal. So you can see it's not like we're looking at every single signal. Right now, if we're looking at the hawk, we don't trade yellow bars, so I'm pretty much ignoring everything that's going on here. And I'm looking and my trend lines are starting to cross over and the bars are getting red. Well, now I'm going to be on the alert for a possible first micro-macro cross signal to sell. So when the audio alert says, I've got a scalp signal, well, then I can come back here and I can take a look. Do I have my warning dot? Are the rest of the parameters in place that I can actually take the trade? Oh, darn it. While I was showing you that, we got that retest and we got the short signal here on the Raptor now. I wonder if they're going to let me get in there if I try to simulate it with a limit order. Are they going to back up enough to get me? We're just going to simulate this order. What I was waiting for is I was waiting for the market to retest the high and fail. And then we would anticipate that the market's going to head lower. All right, so they did back up a little bit so that I can simulate this order for you. And the tool I'm using here on the right-hand side, this one's called the Trailblazer. The other one that you see on the other tools, that one's called the Trade Manager. They're very similar, except the Trade Manager has a built-in risk component, which I'm going to show you in a moment. The Trailblazer is more of a one-click entry system where I can hit the buy or sell market buttons, or I can place an order on the screen as you saw me do. Once the order is engaged, I automatically get my profit targets, I get my stop loss. In this case, I'm running a break-even trigger. I've got 16 different stop strategies to choose from here, and all of them are fully customizable. And you can use whichever one you feel is most appropriate for today's trading. Right now, I think it's pretty important that we try to cover this trade near the high. Yeah, I might even do that one. There we go. Let's just hold that above the high for the moment. And what you'll see happen is, well, I should maybe change. No, I'll leave it like this. I was going to say I'm going to choose a more aggressive stop strategy so you can see how the Trade Manager automatically rolls the stops for you. These blue dots that you see here, this is our stop strategy in action. If I went, say, to the ATR, and let's dial that back a little bit. Let's see, where's that at? Oops, sorry. These blue dots show you how the Trade Manager would have managed your stops if you had been using the ATR strategy. Right now, I think it's better, though, that we stay above those highs. And why did they? There we go. Oops. Why are they not? There. Okay. So while we're letting this trade kind of sort itself out, let me show you here on the trade manager. Oh, good. We're getting a first micro-macro cross signal. You notice we have this risk component down here. This risk component is going to limit my risk exposure to 2% of my capital. So regardless of where I place my stop, I'm never going to risk more than 2% of my capital, whether I keep a tight stop or whether I have a very loose stop. Terrence is asking, can this system be used in the Forex market? Yes, absolutely. It can be used in the Forex. It can be used for the stock market. Any chart you can plot on NinjaTrader, actually. Javier is asking, are those lines fluid through the day? The support and resistance sweet lines? No, they are not. I'm assuming those are the lines that you are referring to. No, these are predictive. These tell you what's likely to be the most important price levels today. So if we see the market break down and get below the median line here, which is currently at 44.0175, and you need to remember with this type of situation, we don't follow the number right to the decimal point. You know, these are predictive, and therefore we need to allow them a little latitude. So for instance, here we came up a tick short of our primary support. So that doesn't mean that the market didn't respond to the primary support. It's just that, hey, you know, this predicted that this was going to be this level, an influential level today, or in this case, yesterday, sorry. I think I just heard the hawk signal get filled. So here with the hawk, again, I can preset my profit targets. Oops, sorry, down here. I can preset my profit targets. Currently, I'm going all in, all out because it's a very choppy kind of day. I'm just going to take profit once I get it. Oh, way to go, Tony. Tony's working a late filter entry signal on crude oil. Yeah, crude oil is going to be a little bit quiet too until around 10:30 this morning, where we get the crude inventory report. Now, normally I'm just going to leave the profit targets in, but because we're in the demo room here today, if we get a little bit of a move here, I want to show you how the trade manager actually rolls these stops. So I'm going to go with the ATR strategy. This may turn out to be a little bit tight. Hopefully we'll see the market tail off a little bit, and you'll actually see the software automatically roll the stops for you. Why is that important? Well, a lot of people don't know how they should manage their trade. So what you can do is when you open up your charts in the morning, you can say, yeah, okay, it looks like this stop strategy is following the market pretty well. I'll go with this. Or, you know, maybe you want something a little bit more aggressive. Sometimes when the trade has a lot of open profit, I'll move to something more aggressive like the parabolics or the bar high-low strategy, where we can protect more of our open profit. It takes a lot of the stress out of your trade as well, not knowing how necessarily you want to manage your stops. And it also frees you up to look for other opportunities. Now this trade, these two trades that we have are essentially on autopilot. Right? I don't need to follow these anymore. The trade manager is going to automatically manage everything for me. I can go check crude oil. I can go see what the euro is doing. I can, you know, check gold, whatever. I don't have to be glued to the screen and perhaps miss other opportunities. Ralph, yes, very observant. Ralph asked, does the varying bar width signify volume within the bar? That's exactly what it does. So let's go back here to the Raptor where it's a little bit more obvious. Now, Thanks for pointing that out, Ralph, because that's actually a system add-on. It's not stock with the DTS system. These are called the dynamic equivolume bars. And for those of you familiar with equivolume charting, all it does is it expands the bar to represent the volume. So the heavier bars have more volume, the thinner bars have less volume. Now, what a lot of traders don't realize is that when the market is trending, it's actually trending on light volume. I know there's strong volume associated with a breakout, but the bars themselves tend to be relatively light in volume because there's no selling, in this case, no selling against the buyers. It isn't until we start to hit some serious resistance that you see some volume coming in as the sellers become more aggressive. And we could tell there was some support here because, again, the volume is getting a little bit wider or more active as the buyers try to prop up the market. Javier is asking for a crude oil chart on the Raptor. Absolutely, I can do that for you. Just give me a moment to load that up. Oh, and before I forget, if you haven't heard about this yet, this week Adam's actually got a special going on for Father's Day. Where did I put it? One second. Here we go. Okay, so for this week, this is a huge discount. Adam doesn't usually discount the software this much, but here's the discount code, FATHER25, all caps. If any of this appeals to you, then a great opportunity to take advantage of a great discount on some of this software. All right, so here's crude oil now on the Raptor. I didn't go over the high probability signals with the Raptor. Again, it's not as confusing as it might look. We tend to look for, well, here's a high probability signal. This is what we call a cloud crossover signal. The cloud crossover signal occurs when the clouds cross over. See, that wasn't hard. When the clouds cross over, we anticipate the market's going to retreat into the cloud and that the cloud is going to offer some support to the new direction. And when it comes out of there with a signal, that's a signal that we're interested in taking. That tends to be a high probability signal. We also tend to look at hard edge bounces. This is actually an early cloud crossover. The clouds were still in transition. But whenever the market intersects the hard edge of the trading band, we anticipate some sort of reaction. This is what we call a double pullback signal. So we pull into the trading band, hit the hard edge, come out, hit the hard edge again, and then we come out with a signal. That's a fairly reliable signal right there. You can see crude has actually been trading very well. Here's a couple nice hard edge bounces. Again, a double pullback. We come out with a signal. So here again, a cloud crossover. So the clouds cross over. The market didn't retreat into the cloud as far as it normally would, but it did come out and produce a signal and really never looked back from there. This was trying to be a cloud crossover. It actually turned into a double pullback, a very big double pullback. Hit the far edge of the cloud, came out, produced a signal. So just like with the other tools, we don't necessarily follow every single signal in. Rather, we're looking for high probability setups. We're looking for certain setups. And right now on crude oil, we've got one bounce into the hard edge. We've got the second bounce into the hard edge. Maybe we're going to come out of here with a buy signal. It's still too early to say. All right, how's our trade progressing? Well, our hawk trade would have hit our profit objective. Also would have hit our break-even trigger. I'm just going to let this one ride out with the ATR stop. You can see our stops were here and how Trade Manager is automatically rolling them down for us. Let's see if we can get this bar to close on the low. Maybe we'll get it to, you'll actually get to see it move. Come on. There you go. You can do it. Come on. Oh, 4,400, a very important number for the NASDAQ lately. And if there's other charts that you guys would like to see, I tend to trade the NASDAQ quite a bit, but if there's, E-mini traders in the room or gold or soybeans or Paul is asking, oh, there we go. Okay, so you see how it's rolling the stops down? And we also hit our profit objective here on the Raptor, just tagged our profit target. And we also hit our break-even trigger. So the stops automatically went from up here down to here. Terrence, yes, I will pull up the euro for you here in a second. And I'm going to go to an ATR stop on this one too for the remainder. There we go. All right, so Paul was asking, why wouldn't you have taken the consolidation pattern on the NASDAQ? Okay, I'm assuming if you're talking consolidation pattern, you're talking about the hawk. It would be because of the yellow bars. The yellow bars on the hawk are very neutral. And I tend to stay away from the market when it's printing yellow bars on the hawk because it's pretty evenly balanced. It could go higher, it could go lower. But you're correct, there was a 4-arrow consolidation pattern. These yellow bars kind of spoiled it through here. Also, it was very early. I don't usually take a trade the first couple minutes of the day unless I get a very strong looking signal. And then sometimes I'll make the exception. All right, this is close enough. I can actually force the trade to break even. I'm going to wish I had gone out with on target there though. All right, Terrence was asking about the euro. All right, here's the euro, the 6E. Here's the euro on the hawk. You can see it was, well, let me go back into the overnight, into what would have been the native time for the European session. So the market opens right about here, London time. Again, we get some yellow bars. This technically is our first micro-macro cross signal. Took a little bit of heat on the trade, but it eventually worked out. Actually, you could use this also as a first micro-macro cross signal. So in this situation, we have two. The first micro-macro cross, you don't always need the trend lines to cross, but when everything goes out of sync and comes back into sync, then you have a high probability trade. So here, the bars went out of sync, the trend lines went out of sync, the filter went out of sync, and here everything, a few minutes later, everything came back into sync. And so you knew you had another high probability signal. Oh, here's a macro pullback signal. Let's see, did that one work out? Oh, it did eventually. You see, I'm not a fan for crowding my trades. Here's a 4-arrow consolidation pattern. And it just stayed a 4-arrow consolidation. So there's a 4-arrow consolidation pattern. But we have very little structure down here. Right? We do have a couple of hits on these lows. But watch what happens. If I place my stop, say, right below here, note the risk amount, $450. Now that's 2% of my capital. But what happened if I took that trade that way? Well, the market brings me in, and a few moments later it stops me out. Now for that reason, I tend not to crowd my trades too much. Because watch what happens. If I run my stop, say, down below this swing low, oh, the risk amount is about the same. Right? The risk amount, there's a rounding error in here, but we're still risking about $400, give or take. But what are the probabilities that this trade is going to work out? Well, the probabilities are much higher, of course, because we have a much deeper stop. So even when the market's pulling against me in a rather serious retracement, I can still ride it out and eventually hit the profit target. Now, in practice, if I'm only running a single contract, I'm probably just going to use it as a runner. I'm not going to take the high probability target. I'll probably see if it won't run out a little bit further. And in this case, it actually would have worked out pretty well. But knowing that your risk is going to be the same whether you put in a very tight stop or a more reasonable stop allows me to use a more reasonable stop, right? And I don't have to worry about overextending myself. That's a huge problem for most traders, is they end up risking far more than they can afford to lose. Terrence is asking, is the runner function automatic? Well, yes, in a way. Currently, I have my trade manager set up to be all in, all out. But let's say I wanted to take, I don't know, a third of my profits on a 10-tick target, and I can change this as well. Let's say I want to have a 15-tick target. So right now it assigned a third of my position on target, and the other 2/3 are going to be a runner. Now we don't have a signal here, but let me just show you how this works out. So let's say I set up the trade like this, where I have 3 contracts, and you can see that a third of my position will come off at 15 ticks, and the other 2/3 will be left as a runner. Or if I want it all as a runner, I'd simply change my target 1 to 0%, and now everything will be a runner. So you see there's no profit objective there. In practice, even if you have everything set for being all in, all out, you can simply X out your profit target when you have it. So let's say we're looking at this macro pullback signal, and I only have 1 contract. We'll see whether they fill us here in a second. Providing the market doesn't, just fly up there in a heartbeat, I should have time to X out my profit order when it engages. All right, so, oh, no, that's not the one. We must have got a reversal on our NASDAQ trade. Okay, well, you can exit out once this order goes live, if it goes live. Come on, get up there. All right, so now we have a complete macro pullback signal. So everything is in sync except the micro line. It goes out of sync. We've printed the triangle, the warning dot triangle hash mark My entry is actually just one tick above the hash mark. It's not intentional, it just happened to work out that way. Paul is asking, how would you trade gold on the Eagle at the moment? All right, well, we're waiting for that to fill. Here's gold on the Eagle. I don't think I would do anything with gold on the Eagle at the moment because we don't really have a trend here. It is looking maybe a little bit more promising on the Falcon swing trader, where we're getting a possible trend change signal. See, our trend line has changed from red to green, and now we have our first signal where everything is in sync. So we have the market pushing up, coming back down, coming back up, and now we actually have a buy signal. Now the triangle and hash mark are a suggested entry. For another 2 ticks, I can enter above this little swing high, and I can cover below the low. I might feel a little bit better about that kind of trade. Gold looking a little bit choppy, but there's a possible trade on the Falcon for gold. And they're going to be stubborn and not let me in here, but you're going to have to take my word for it. If they engage this order, I can X out the profit target and turn that into a runner. All right, so there's the euro on the hawk. Here's the euro now on the Falcon. And a nice progression, a couple of signals here that would have been very difficult to take on the Falcon. Here's a nice signal though, out of the open, the London Open, we had a very strong signal. This is the late filter entry signal. Right? The trend line does not go out of sync. The filter goes out of sync, comes back into sync, and produces our buy signal. And you can see very nice progression through there. And depending how you manage the trade, you may have been able to ride out that swing. Even if you weren't able to take out this swing and you took profit here, you did get another buy signal, not on the Falcon, but on the hawk. Again, that's why we have 3 different tools, because the markets may not always be trending, they may not always be swinging, and they may not always be scalping. Here on the Eagle Trend Trader on the euro last night, nice little move. We got our trend change signal, so the band changes direction. This is our first signal where everything is in sync. Also nice little bounce off of the hard edge. Again, this is right around the London Open, and a great little progression higher. Got a secondary signal right here as the market flipped over our ATR line. That's a squiggly red and blue line that you see here. And that was followed by yet another continuation signal right there. So at least according to the Eagle, the euro seems to be trending pretty well. This tool here in the top corner, I forgot to mention that, this is also a system add-on. This is the Trade Forecaster, and what the Trade Forecaster does is it tells you what the current market environment is and what the next one is most likely to be. So right now we are in trend mode and with scalp mode in about 2 minutes time. So expect things to become perhaps a little more conflicted. So let's put that away. Okay, just making sure I didn't miss anybody's question. P. Kumar is asking, I have the Eagle, Hawk, and Falcon. Please explain the Raptor product and its function, advantages, etc. Okay. The Raptor, as I mentioned, is an amalgamation of the other 3 birds all into one trading system. It came about because we had a lot of owners who were trading off of laptops, and they said, can you give me a one-screen system? I'm just used to trading a one-screen system. And you can see you don't need 4 monitors. You can just get by minimizing your charts and then expanding them as your signals develop. But even so, we had traders requesting a one-screen system for whatever reason. So the Raptor incorporates elements of all 3 birds into one. There's elements of the hawk, the falcon, and the eagle behind the signal generation here. The Raptor is more customizable than the other trading tools. The Raptor, you can actually make changes. You can change your cloud sizes. You can change things on the way the signals are generated themselves. You can adjust brick sizes and so on. The other DTS birds, the programming is locked. You cannot change anything on it except for the brick size itself, except for the bar size. So the Raptor, if you're one of these people who likes to tweak their system, then the Raptor has that option available. The Raptor tends to sacrifice quantity of signals for quality of signals. I know it doesn't look that way right now as we seem to be printing a lot of signals. It's just because the market is very choppy at the moment. But as a rule, it tends to produce fewer signals, but they tend to be higher quality signals. So here we had a soft edge sell signal, or you may also have considered this a cloud crossover signal. And you can see we had a nice progression through there. Some Raptor owners like to use the Raptor just as an additional trading tool, because there will be times that the Raptor is going to produce its own unique signal, especially when the trend is making an early change. You're going to find that the Raptor and the Hawk are going to be the first to provide you with signals. And some traders like to use it as a confirmation tool as well. So if you're looking at, say this pending first micro-macro cross here in the Hawk, technically it missed the macro line. So technically it's not a first micro-macro cross. But if you're kind of looking for confluence here, if you're looking at that signal, you may glance down at your Raptor and, oh, look, my Raptor is also producing a warning dot. That may give you a little bit more confidence that everything is in sync, knowing that the Raptor, as I said, tends to produce fewer signals in favor of better quality signals, if that makes sense. Terrence is asking, are there training videos on YouTube? Yes, there are. Indicator Warehouse actually has a YouTube channel. So if you're at YouTube, you can search Indicator Warehouse and you'll find the whole whack of videos there. And each day we have the DTS trading room. So today it's an open house, so everybody can see how it works, but we do this every day, and every day I will highlight trades for DTS owners. It's partly a trade call room, but it's also a trade education room. So I'll take the time to explain signals to you. I'll take the time to show you, that we're getting this trend change signal, how you should set it up, where you should place your stops given the current market condition, why you may want to, pass on the signal. We don't pass on a lot of signals, but today is probably a good day not to take too many trades. I suspect the market's just going to waffle back and forth, pretty much like it did yesterday. P. Kumar is asking, for existing customers, is it possible to get the cheat sheets? Yes, absolutely. Anybody can have the cheat sheets. If you want, you can just email me. and I'll put my email in the window here. It's eric@supportandresistance.com. The trading systems here, so you're looking at like the hawk, it's not simply a moving average crossover system. I know that's what it looks like, but it's not. For each of these tools, there's about a half a dozen algorithms running in the background, parameters that have to be met before you even get a warning dot. Some of the parameters are momentum parameters, some of them are volume. There's even price parameters that have to be met for these trades to initiate. So, don't think that just because this is what you see on here, it's much more sophisticated than that. And the programming is unique. The programming for the hawk is specifically designed for scalp signals. The programming for the Falcon specifically designed for swing signals, and the programming, of course, for the Eagle specifically designed to find trending signals. Okay, so we're just floundering again. How are we doing for time? We're almost getting close to crude inventory report. Let's see if there's anything going on with the crude oil market that might be interesting. Well, kind of dead, but it'll give me a chance to show you the OCO function. So here's crude oil on the Falcon. You can choose any of the tools. I tend to go for the Falcon for this type of trade scenario. Crude inventory is coming out in about 7-8 minutes time, and normally it's pretty influential on the crude oil market, whether it's going to go higher or lower from here. When we have a market that seems to have established a range, we can bracket this range and just let the market itself tell us which way it wants to go. Well, for that we have this nifty little OCO function. And with the OCO function, I simply right-click on the chart, enter my buy and sell orders. Now, unlike the other orders, these are live the moment you put them on your chart. So what I tend to do is I tend to place them away and then I'll pull them in to where I want them to be. So I'm going to use the primary resistance as a trigger, and I'm going to use these lows as a trigger here. If I toggle the OCO function on and off, I can put more bracket orders on. I can throw another bracket order over here if I like, and you see that they're differentiated by the numbers. So I can tell which order belongs to which set. So for instance, if I did this now and entered a sell order here, you see these two are connected, the number 3s, the number 2s, the number 1s. If I cancel one order, the one associated with it cancels. And with the OCO function, your stops are automatic. I want to make sure I have a stop engaged here. Let's maybe go with the chandelier, which tends to be a little bit more conservative. Yeah, I'll go with the chandelier, I think. So my stops are enabled, so that means if the market rallies and fills my buy order, I'm going to have a stop in play. If it falls and hits my sell order, I will also have a stop in play. You can see when prices trade through the stop, it flips to the other side. Right? Trades through the stop, I'll have a stop on the other side. So this means I'll have a viable trade, and we'll see whether or not this works out to anything. There's usually two ways to trade crude inventory report. One way is to bracket the range like you just saw me do. The other way is just to let the market engage or let the report come out, and about a minute after the report comes out, you'll see a tight little trading range based on the inventory. And then you can bracket that range if you choose. Okay, nothing going on here, so let's bring this back for a few moments. We'll watch the crude oil, and I'll put a Geiger counter on here. So we can watch the order flow. And maybe crude oil will actually give us something. Come on. It's funny how very often the DTS system will produce a signal prior to the inventory report, and we'll actually see the report follow through on that signal. So right now, we're about 2 or 3 minutes before the report release, and we've actually produced a buy signal here on the Falcon. We'll see whether or not that holds. Very often we get some confirmation, further confirmation when the when that unfolds, when that report actually hits the floor. Oh boy, everybody is just so cautious. I don't know if the British referendum is really going to matter that much to the crude oil market. I guess it's going to affect all the markets to some degree. Okay, we've got about a minute to go here, and we should see the Geiger counter get a little bit more excited. We should see the bid and ask numbers become a little bit more substantial. Right now they're single digits. We should see some triple digits go through there. There we go. We started to see some 200s flash. Okay, there's some serious buying. Somebody loading up on the buy side. Now I could have placed my entry order a little bit tighter if I chose. Oh, somebody else loading up on the short side. So traders trying to get themselves positioned ahead of the report. All right, about 30 seconds and we'll should see something going on here. Oh, there's a pretty evenly balanced. You can see on the tape portion here. Okay, anytime now. Really? Is that all you guys got? No. All right, here they go. I can tell by this bar how quiet it is. We're going to get the report is going to hit the floor here in a second. See how it's starting to toss a little bit? All right. And there it is. Oh. So it came down really fast, hit our sell order, hit our break-even trigger, and also rolled in our stop. So we got a little bit of a lucky break there. I forgot to disengage the break-even. But even so, we're looking at fairly profitable at the moment. Of course, you can always just punch out with your profit once you have it. Nothing's preventing you from doing that. Look at that sell spike that came through there on the report release. Just massive. Buyers unable to counter, and boom, down she went. So 49.60, 49.50 offering a little bit of support for the market, and they're going to try to rally it up here. It looks like we got a little bit of a double bottom going on. Well, that was a little bit more active than we normally see in of late anyways, during the crude inventory report. But that's how the OCO function works. It was good. I got to show you that one. All right, what do we got here? Oh, we actually have a cloud crossover here on the Raptor. Now, I told you that you can also just hit your buy market button, right? You can hit your buy market. You automatically get your profit targets, your break-even trigger. That's on the Trailblazer now. The Trade Manager, remember, has that built-in risk component. So we'll get a stop in play here as well. And again, maybe we'll see this bar close a little bit higher. I can show you how the Trade Manager is going to roll those stops for you. See that? So it took the stop from down here, automatically rolls it up. Pretty much hands-free type trading. So the cloud crossover, the clouds cross, the market retreats, hits the hard edge, comes out, produced a buy signal. And they're contending with the highs now, but it looks like the buyer's trying to get a little bit of traction. Oh, nicely done, Tony. Tony, was that the gold trade that you were in, or the oil trade? Tony says I'm out with $594, but he's trading in Sim. But you know, if you can do it in Sim, you're going to be able to do it with real money as well. Nicely done, Tony. All right, so we're just hovering below the break-even trigger. There we go. We hit the break-even. Let's get that first profit target now. Get up there. Give it a little push with the mouse. Help it along. There you go. Get up there. Come on. Oh, well done. Tony says he did that on crude oil. He had a much tighter OCO order. Yeah, I thought about doing that. I'm always afraid of that initial whip. You know, crude sometimes gives you that little fake move to start. Come on. There we go. So we've hit our first profit target. With the Trailblazer, you're going to notice I've got the quantities and the targets up here. So I had one contract on at a 20-tick target, and then I have the additional contract on as a runner. So now we're going to run this trade out, trying to see if we can't pick up a few more ticks, hopefully ride out this swing that's going to be coming our way. Okay. Now, you know, there gets a point where you look at your trade and you say, well, you know, that's starting to get a little bit dear to me. You may choose to use a tighter stop. You can preview what these stops are going to look like. So for instance, if I wanted to see where the parabolics were at, because parabolics tend to be a little bit more aggressive as the trade progresses, you can see these, or hopefully you can see these little orange hash marks. And if that looks better to you, then you just click accept, and now you're running with the parabolic strategy. I like parabolics when the trade has some open profit because it's going to tend to get in there a little bit quicker. If that's not aggressive enough for you, we also have the bar high low strategy, which can be ultra aggressive. Oops, let's put that below the low. So you can keep your stop really tight to the market, and it will take you out on the first sign of weakness. Come on. Oop, I forgot. Let's turn those back on. There we go. Gotta have that stop and play. So the seller's trying to step in here just shy of the 44.20 mark. Where was our support and resistance suite? Oh, look at that. We have primary resistance at 44.19. That's what's slowing us down. So we had a trend change signal here, a little bit of a bounce off of the median line, the trend change signal, and there is our signal. You can also manually set your targets. I haven't shown you that. So some people, I know Omar, who used to do the Forex room for the DTS trading, used to like to use the support and resistance lines to cover his trade and also as his profit targets. So he would have placed his stop below the median line on the signal, and he would have used the primary resistance as his profit objective. So his trade would have looked something like that. And you can see, nice, it worked out very nicely. I should mention as well that you see I've only got one of these tools on each of my charts. For instance, I only have the support and resistance suite here on the swing trader. I only have the Geiger counter on the Raptor. It's because they're redundant. It doesn't mean I can't put a Geiger counter on all my charts. Oops, went past it. Where is it? Or that I can't put the support and resistance suite, the support and resistance lines on all my charts, or the trade forecaster on all my charts. It's just, you see, it's redundant. So to minimize the amount of stuff I have on my charts, I've just allocated one tool per chart. But I do know some of the owners who have the support and resistance lines on all their charts. They just find it more useful, and that's okay. You can do it any way you want. But the numbers will be the same. The numbers are going to be the same because it's the same market. All right, so we're still struggling here with 44.19. You can see the width of the bar. We're getting a little bit more market participation here. I don't know if it's going to be enough to knock them down, or if it's just going to be a little temporary retrace. Parabolics may not be able to ride out that retracement. Parabolics are a little bit more aggressive. Come on, get up there. How are we doing? Yeah, that's not bad. So we've already taken profit on one of our contracts. This is the open profit on the remainder. So we're trading, got about 110, 115 right now in open profit. If I punch out of that, we'll keep 110 of it. Paul is asking, Eric, what settings do you use on gold? Gold, you can use your default settings, which will be a 6-tick hawk, an 8-tick falcon, and a 12-tick eagle. Or if you choose, you can use the alternate settings, which is a 4-tick hawk, 4-tick falcon, 6-tick eagle. Now, I currently have the alternate settings on gold. For no other reason than I run one set of charts on the alternate settings in case somebody wants to see the E-mini, which uses the alternate settings, or in case somebody wants to see one of the grain markets like soybeans or something, it uses the alternate settings. So that's why I have gold on the alternate settings. But you can use the stock settings, the default settings for gold as well. It'll work just fine. All right, well, they're taking their time on this one now. Let's see, did we have any other signals developing? No, that nice Falcon signal there. Oh, here on the Eagle, we had a nice with trend signal. So very, very choppy through here. This would have been a difficult signal to take when it printed, because this is what it looked like, and at the time, everything still looks like trading range, right? Not really enough room to profit up here when the signal is printing. Not really enough room to do something with my stops in case the market bounces off of the highs again. So even though it's a valid signal, quite honestly, I might have been a little reluctant to take that. I would have been less reluctant to take the signal here in the Falcon because I've got a little bit more, oops, let's go back with my auto target. I've got a little bit more room as the market approaches these highs. I've got a little bit of ability to adjust my stops if the market starts to react against me. So prices go up, I would have hit the break-even trigger, and I would have easily found our high probability target on that trade. Oh, getting some double dots here. We might see a little bit of a downturn, maybe. When the dots tend to group like that, sometimes the market will try to reverse. All right, so Parabolic's doing a pretty decent job holding us in this trade at the moment. The Raptor continuing to look fairly bullish, and I think we've got ourselves a bull market. Okay, let's go. How are we doing? Nice. You see, the important thing with using a tool like the Trade Manager or the Trailblazer is that you always want to be correctly sized to maximize your profitability. I'm going to show you here on the Hawk because it gives me the most flexibility. But remember how I said we don't necessarily want to crowd our orders, right? If I take the trade here, the risk is going to be the same as if I set it up like this. Okay, rounding error, but you get the idea. By being able to set a reasonable stop so you don't get stopped out prematurely, Trade Manager will also ensure that you're always maximizing your profitability. It will always give you the maximum number of contracts you can afford for your risk. So if I place my stop really tight here, I've got 6 contracts in play. If I place my stop, say down here, closer toward the macro line, I've got 2 contracts in play. And as I've already mentioned, if I run a really deep stop, say down here, and I only have the 1 contract, I'll probably try to run the market out. I'll probably, when the order engages, I'll probably X out the profit target and just see if I can't pick up a little bit of a move on that. But it's very important. You see here I'm going to show you something that no other trading room moderator will ever show you. Here we had a first micro macro cross was back there. I thought I was going to show you a losing trade. This isn't one of our high probability signals, but let's say we took this trade anyway. And let's say we set it up to cover above that swing high. So the market comes down. Oh, okay, well actually it did hit our profit target, but we're going to pretend it didn't hit our profit target. And let's say we didn't take advantage of the market floundering here to roll our stops. What I'm trying to point out is even if we took the full stop out on the trade, I still haven't lost more than I can afford. That's very important. It's very important that you don't overextend yourself. I've mentioned this before that I've worked with people when I do coaching. I've worked with a few people, 2 people to be precise, that have blown up a $20,000 account in a single session. Talk about not controlling your risk. So it looks like we're getting a little bit more sellers trying to get a little bit more active here. Still quite bullish though. So by always maximizing your profitability while never risking more than you can afford to lose, you pretty much ensure that you're going to come out on top at the end of the trading day. Couple that, of course, with not overtrading. Overtrading is going to be a killer. But that's why we focus on the high probability signals as well. Today we were actually very fortunate. I didn't think I was going to get any decent signal to show you here today. But we had this high probability signal here, right? We had a couple high probability signals on the hawk I got to show you. Where were they? I think it was this guy back here. Nope, it wasn't that one. Well, whichever one it was. Here's a first micro-macro cross. This one actually developed a little bit late. You see this bar right here? This was trying to produce a first micro-macro cross signal, but the buyers were just a little bit too strong, didn't get the signal print until right here. All right, we're doing okay here. Now I've got a fair amount in open profit. Maybe I'll go with the bar high-low strategy, and I'll only give it 1 bar, and I'll stay, say, maybe 3 ticks back. Okay, that's all you're going to get. So if the next little hesitation, I'll let them stop me out, and I'll take my profit. Thank you very much. Come on, get going. All right, so just a reminder that this week only, Indicator Warehouse has got that discount available, 25% off. If you're interested in anything, or if you need to talk to somebody about these systems and you want more information, I'm going to give you Adam's email. It's adam@indicatorwarehouse.com. Little typo there. There we go. You can also call Adam, or he'll call you, whatever you prefer. All right, let's go. Keep going. Don't stop. Oh yeah, very bullish. Oh, this is a nice little trade. So the market spent the most of the morning sideways trying to figure out what it was going to do, and it looks like they figured it out. I think we're going to see some profit taking now as buyers get back. Remember I mentioned to you the other day 44.20 was going to be an influential number. Well, we kind of blew through that one a little bit. But we're getting near, not yesterday's highs, but the day before. Wow, I wonder if they're going to really try to get back to, let's check our support and resistance suite, see where the next stop is likely to be. 44.36. Yes, that's definitely possible now that we've broken the primary resistance. 44.35, 36, a very plausible target. And in fact, I'm going to throw a order in there. Won't be too greedy here. Let's take our profit at 44.35. Oh, we'll take 44.34 half. That'd be a nice trade if we get it. Come on, keep going. No! Get up there. Let's see, where would the parabolics be at? Yeah, the parabolics would give it one more bar. I'm not going to give them that much. 300 is a nice number, 315. I'd hate to let that get away. And we already banked a $100 on that earlier position. You know, push it up again. Get up there. Come on, get going. Come on. Geiger counter getting a little bit more bearish. You see a little bit of selling wave going through there. We'll see whether the buyers are able to pick it all up and push the market, or if in fact the sellers are going to bring us a couple ticks lower. Oh, don't like that. Don't like seeing the dial pull over to the sell side and get stuck there. That's what I want to see. Come on, buyers. There you go. Pull that wheel over and hold it. Terrence, very good question. Terrence asks, is there a trial period? No, there is not. That is the whole reason for hosting the demo rooms every Wednesday. We realize this is expensive software, but this gives you an opportunity to see how the software works real time. You know, I'm obviously not cherry picking trades in hindsight here. I'm trying to show you how this works in real life, real time. As a DTS owner, you have lifetime access to the DTS trading room, which is hosted daily. So, you know, we do everything we can to support you as you get comfortable with your tools. Adam likes to share a story about Oh, darn. Well, that was still a pretty good trade. Adam likes to share a story because when Indicator Warehouse was first up and running and we introduced the DTS system, he noticed that after about 3 months, people stopped attending the trading room. And he would call them up and say, or send them an email and ask, why are you not attending the trading room? Is there something we could be doing better? And people would always respond by saying, no, I get it. I got it. You should have, if you wanted me to hang around longer, you should have made the software more difficult to use. So our goal is to make you an independent trader. And we give you the tools to do that, and we give you the education and the training. Like I said, the daily room is not just a trade call room. I do my best to point out high quality trades for you, but at the same time, it's to help you learn to identify things like the trend change signal that we have here, or the first micro-macro cross signal that we have back here, stuff like that. And there's always, questions are always welcome. I can take a look at any markets that you're interested in. Getting a few requests here for the recordings of the webinar. The webinar will be posted at the Indicator Warehouse YouTube channel, if not later today, tomorrow. It usually takes a day to process and get it uploaded. But if you go to the Indicator Warehouse YouTube channel, you should find the video there. Our gold trade finally getting some traction. We were nursing that for a while. Finally getting some traction on our gold signal. And there they go. Come on, get up there. Get that break-even trigger. If they start to print a red bar, I can force the trade to break even now. There, so now we're playing on their dime. So that took a while. We had to nurse that one all morning, but it looks like it may finally be getting into a profitable position as well. All right, so it looks like, well, we don't have any signals brewing now. It's probably be a few minutes, 15, 20 minutes before we get another decent signal to take, but we're going to close up the trading room here shortly. If anybody has any questions, please type away and I'll do my best to answer your question. Otherwise, thank you for your attendance today. Thank you for taking your time to come in and see what the DTS room is about. I hope it's been a little bit educational for you. Maybe you were even able to piggyback one of those trades. That would have been great. No. Yes. Hakan is asking, is it open every Wednesday? Yes, the public room is every Wednesday. The DTS room is every day. But that's for owners, for members. And you can see what the daily trading is like as well at that YouTube channel. We post the daily trading session also. All right, no more questions. Okay, well, again, thank you for your attendance today. And DTS owners, I'll see you in the trading room tomorrow. And yeah, if anybody has any questions, please feel free to email me or Adam. And don't forget this week, if you're thinking about it, any of these indicators or perhaps even the whole DTS system, this is a real exceptional opportunity to save a whole lot of money on the system or some of these other add-ons. All right, you guys, have yourselves a great day. If you're going to continue trading this afternoon, look for a chance to buy the next rally up. There could be a little bit of a move back here, maybe even as low as the hard edge. maybe a retracement to 44.10, that would be very aggressive on the part of the sellers, as we seem to have a pretty strong bull market right now. Hakan is asking, are you using NinjaTrader 8? No. Ninja 8 is still in beta, so I'm still using Ninja 7, which is the last stable version. Once Ninja 8 becomes stable, then I'll migrate over. But sometimes there's too many conflicts with the new software. All right, we'll catch you guys next Wednesday. DTS owners, I'll see you tomorrow morning. Bye for now.